Yeah, take
Typical.
us through the poll, Brennan.
Yeah.
I get to
Brennan,
say it
take
for once.
us. The
Yeah, I mean,
poll. You got it this week, right?
should I just get right into my segment? Yeah.
Well,
Yeah.
unless we've got something else to talk about, do we?
No, I don't think
No.
so. Okay, well,
Nothing in
get
our
it over.
lives are that interesting. So the Oilers won, Brennan.
I did note that.
The Canucks still suck. I got nothing.
They're golfing right now. So yeah, last week I wrote an article on small cap stocks and Canadian sectors that could potentially benefit from Prime Minister Carney's stimulus spending, and I encourage you to go over to the website and read that article. We'll also post the link to that article in the description of the podcast today, but I will just kind of briefly go over a few key points in the article on the podcast here.
Don't you refer to him as carbon tax Carney?
I do refer to him as carbon tax Carney at the end of the article, so you'll have to read through the whole thing to get there. But it's
a treat at the end, right? Yeah,
it's a treat.
I'll let you talk.
So on the campaign trail, Carney's promises included $77 billion in new fiscal stimulus over 4 years, focused on increased defense spending, infrastructure projects, and new housing construction, alongside personal and corporate tax cuts. And we had a poll this week that went along with my article asking our listeners which sectors will benefit the most. And we had 70 votes, with aerospace and defense getting 11% of the vote. Infrastructure was the winner with 37% of the vote. Natural resources getting 23%, and other, where we were prompting people to comment, got 29% of the votes, with comments including clean energy and, funnily enough, the CRA. Now, I voted
the carbon tax industry.
The carbon tax industry. Yeah, mine kind of went along that way because I voted infrastructure due to homes and renewable energy. But I was a little surprised that natural resources beat defense spending by 8 votes. And just to go over a few of the points in the article, I wrote how Carney said at a Bombardier plant in Montreal, it's clear military expenditures will be higher than 2% of Canada's GDP in a few years, which would be up from 1.3% of GDP in 2023. And this could be an increase of over $25 billion in defense spending. And I cover a couple names in the sector which could benefit, including MDA Space, MDA on the TSX. We've covered them on the podcast before. And I also touched on a few names that we have under coverage. For infrastructure, he plans to build 500,000 new homes per year, which would be an increase from about 230,000 over the past decade, funded by $25 billion on Canada's balance sheet. And I personally thought of renewable energy being infrastructure, which is why I voted for it. As in Carney's book titled Values, he writes that the scale of getting to net zero is estimated at $2 trillion of new capital spending in Canada alone. Plus, his Liberal platform also promised to invest $2.5 billion in digital infrastructure like chips and data centers through the next 2 fiscal years. Now, for digital infrastructure spending, I'm kind of curious to see which stocks our listeners think would benefit. So I included a form in the article where you can submit a stock, and I will possibly cover it on the podcast in detail. Now, I didn't go too much into detail on natural resources, but I do discuss Enbridge's recent letter published to the new prime minister. I think that was on April 30th, which was signed by 37 companies in Canada's oil and gas space. In my opinion, with the carbon tax remaining, carbon tax Carney, and a friendly U.S. president to traditional oil and gas development, it will likely be hard for Canada to attract increased investment in the space, I would assume. So generally, please go out and check out my article. If you have any feedback or other stocks that you think could potentially benefit, which I do not cover in the article, send them over or comment on the poll question. And now I'll just open it up to you guys if you have any comments.
Yeah, I think it's a good place to start. Anybody who believes there is a sector, individual stock that we should take a look at that could benefit from some spending from the new sort of new liberal government that is in power today. I would say that most governments, regardless of their stripes, when they come in, they promise a ton of infrastructure spending. Whether it differs considerably, it may vary in the area they go down Avenue A, Avenue B. There's typically always a need and a thought for infrastructure spending. So we could see there. Aerospace and defense, it hasn't increased significantly under Liberals. It could be a change from a really low base. So, you could go to a higher base. And then there are some companies like, I think Brennan does mention Fearan,
Yep.
a company that, we've recommended for, it's a part of their business is in that area. It's not the biggest part of their business, but I mean, again, you're buying a high quality business that has, again, the stock's gone from $1.30 to $9 plus. It's likely closer to fair value right now, but if you're looking 3 to 5 years out, Fearan's a good name. It's done tremendously well. It could be. We're always looking for the next 10 bagger or 10x stock. Fearan is now well on its way to joining that class of companies that we've recommended over the past couple decades. Anything further on sectors, stocks that we think might outperform?
And if I could just make a point on Fearan there too, is that we've talked a lot in the current environment with all of the trade uncertainty about investing in companies that have flexible supply chains or customer chains. And I actually spoke with Brad, the CEO of Fearan, when he was at the World Outlook conference in February, and he was talking to me about how they were able to essentially move a lot of their supply around. A lot of their customers were able to shift their supply chains as well to avoid a lot of not completely eliminate the risk, obviously, but avoid a lot of that risk, which you would think in aerospace would be higher. But there's individual companies and situations where they're more or less better positioned in this type of an environment.
Yeah, it is impressive how, and we'll see how the year goes and what the tariff war or the tariff environment on again, off again brings. But Fearan, for example, is one company that has been able to, again, we haven't seen a ton of quarterly time with the tariffs really invoked, but they have a more nimble supply chain than many do, and just in terms of production, where they can move production.